The Australian economy is growing slower than expected, and Treasurer Josh Frydenberg today asked business to do more to help the economy and lift our productivity, which has been very flat. He wants business not to give so much of the profits back to shareholders and to invest it instead. Returns to shareholders have been more than double the average over the past 4 years. Joining me now is the Treasurer, Josh Frydenberg. Thank you so much for your time. Before we get to your speech, can we just pick up something that Tom was mentioning that's obviously a big part of these discussions, the G7, the trade war between the United States and China. What effects have you noticed so far from this trade war on our economy?
Well, it's put a negative slant on the global economic outlook. That's been the most significant impact, with both the IMF and the OECD downgrading their outlook. That means there's going to be slower growth in trade volumes. There will slow down capital inflows. It will lead to the deferral of investment decisions. And just one anecdote from when I've been out on the road was when I was in Launceston the other week, and I met with some people who had been involved in the forestry industry, and they said that a local company that sold wood chips into China had their orders cut because China is no longer selling the pulp into the United States. So we can be hit by the effects of that trade relationship deteriorating between the US and China.
But on the other hand, I'm also hearing, stories about how, well, I'm seeing data too, about how imports or our exports to China have risen a lot, and that perhaps China might be switching more business to Australia that it can't get, say, from America. Are you hearing anything like that?
Well, our two-way trading relationship with China has continued to grow significantly since we entered into that free trade agreement back in 2015. In fact, Andrew, it's up more than 40%, and last year it was over $215 billion. So it's no surprise that our agricultural producers, our resource companies, our service providers, tourism, education, health, financial services are starting to do more and more business with China. They're a massive market, and they're a good customer for Australia, as well as being an investor here at home. But some of these trade tensions have also put downward pressure on the iron ore price. And as you know, iron ore is our most significant export, and that obviously impacts upon the companies involved and government, whether it's federal or state revenues as well.
So net, what do you think? Is this trade war threatening at all your promise to post the budget surplus this year?
We'll deliver a surplus as promised, but there's no doubt that Australia gets hit by these trade tensions. And as Tom said it in his comments to you from what looked like a very nice spot in France, is that what he was saying to you is that these trade tensions are real. They've escalated. They're not just rhetorical. They are playing out far and wide, and Australia does get hit. So our interests, despite some of the legitimate issues that the Americans have in their trade with China, particularly around intellectual property, for example, we would like to see the two sides come to the negotiating table, resolve their differences, and for cool heads to prevail.
Yes, that's one of the major beefs that the United States has, that China's been ripping off, stealing intellectual property left, right and centre from American and also European businesses. But to your speech, Treasurer, you want business, you said today you want business to invest more of their profits in the business, grow them, rather than pass on so much in dividends, special dividends and whatever, to shareholders. Why is that?
Well, I was actually just pointing out the fact that we've seen around $29 billion worth of share buybacks and special dividends over the last 12 months, which is significantly more than the $12 billion that was at the average over the last 4 years. And I think one of the reasons for this is a little bit more risk aversion by some of our corporate leaders. And I've said to them that they could take a leaf out of companies like CSL and Cochlear out of their book, because they're investing heavily in research and development and other capital equipment. And it's that investment that enables companies to grow over the longer term. So sure, it's important to provide dividends to shareholders. It's shareholders who own the company. But in the long-term interests of those companies and of the economy more generally, is to expand the horizons, take new ideas off the drawing board, put them into action and invest. Because what I did point out in this speech, Andrew, is that the 28 consecutive years of economic growth that Australia has enjoyed has seen our growth average around 3.1%. And more than half of that has come from productivity gains. And one of the reasons why productivity has been high over the years is because of strong capital investment. And that has started to decline, and we want to halt that decline and get companies investing in those areas.
But surely any good company would already do what they would perceive to be in their own best interests. And we already have businesses like Boral saying, well, hang on, Treasurer, these are decisions for business to make. They don't need government to tell them what to do. That's what they're saying. Do you have a right to tell them how they should run their businesses?
Well, I'm just pointing out the fact that share buybacks and special dividends have become more and more the default option as opposed to one of a suite of options. And it's absolutely up to companies to make those decisions. They make those decisions in the best interests of those companies. But at the same time, the success stories of a number of our companies has been when they've invested in their business and grown. And I've been contacted by a number of business leaders today to say that was right on point, that actually corporate Australia should be expanding, should be investing, even despite some of the instability and challenges we see in global markets and some of the domestic challenges. I'm just suggesting that they think long term, and that when they come to their capital formation decisions, that they put the interests of the company and the economy first and foremost in their minds.
But is this just in the nature of good advice on how to run a business from the Treasurer, or is this going to be backed by some stick at some stage, some law, some change?
Well, actually, my speech today was about how we want to reduce the regulatory burden on companies. We want to free them up. We want to enable them to grow and create more jobs, bearing in mind that we've created more than 1.4 million new jobs since we've come to government, and that 9 out of 10 jobs are in the private sector, not in government. So ultimately, my job, I see it as creating the conditions in which businesses can grow and invest, put ideas into practice and employ more people. That's my job, and that's what we're doing.
And finally, some shareholders, self-funded retirees, are already doing it tough because interest rates are so low, and now they've got you saying they shouldn't get quite as much back on their shares either through these special dividends and the like. I mean, we've already seen the Shareholders Association cut up a bit rough about what you said today. If the business follows your model, the shareholders are going to feel a bit of pain short term, aren't they?
Not at all. Not at all. If we go back to that 4-year average, you will see less share buybacks and more investment in companies, growth plans. And that's all I was pointing out today, and I think it's an important message. And there are plenty of Australian companies like SEEK, like Atlassian, like Cochlear, like CSL that are investing in their expansion plans. There's great opportunities out there, Andrew, even at these times, and we as a government want to cut red tape, want to lower taxes, want to spend more money on infrastructure, want to skill up our workforce, want to put in place competition reforms that stop some of the barriers to entry. That's all going to help businesses grow, and my message to them is keep going, keep investing, and your government will back you.
Josh Frydenberg, thank you so much for your time.
Good to be with you.